Welcome back to Good Morning Sri Lanka. I know you were waiting, you were staring at your money, you were staring at the screen, you're waiting for the show to know how to make some bucks. So here we are back again with you on Good Morning Sri Lanka with Mr. Purasisi. So coming back, so the big question is it now? Is the question. So we can say Sri Lanka is doing well and all these things, but a lot of people have an anxiety. Should I do it now? Should I wait for 3-4 more years? Are we volatile now? What would your take be?
Sure. My answer to that question always is the time is right now. And the reason for that is because you can always find undervalued stocks. But I understand over the past 2 years, the all share price index, the main index in the country, has not performed very well. If you take the annualized return, it was less than -1%. So people are hesitant to go back into the market. But over the past 2 years, the government has implemented policies that has led to a low interest rate environment right now.
Yes.
So the treasury bill, the government treasury bill, is about 7 to 8%.
Yes.
So people are thinking, why should I put my money into this when I can, they're looking for something more, right? So over the course of the next 6 to 8 months, we at Cal Research, we feel that government is probably going to keep rates low.
Okay. The interest rates low.
Yes. Interest rates low. So because of that, more and more people will shift into equities.
Okay. Because of the higher benefit,
higher returns that you can achieve.
Yes.
Now, our feeling is that the all share pricing index, it can go up to about 6,400, 6,500.
Okay.
Before that's let's say the sustainable level.
Right.
Anything beyond that, you need lots of money coming in from institutions and foreigners. So that's about 10% from where it closed in December 2013. So that's a good return. So within that, there are of course companies that are going to give a much higher return.
Because that's the average you're talking about.
Yeah, that's the average. So now's the time to invest in equities, and over the next 6 to 8 months, we highly doubt that the government is going to increase rates, because consumption is only now starting to pick up. And you won't see that in the wider economy until the second half of this year.
Yes. So basically, the pointer that you also give is maybe it's good to keep a check on interest rates as well.
That's right.
To see the mechanism of the market. Now, something quite interesting that you said, which I would want to touch upon. You said there are a lot of undervalued stocks right out there. I know we might be getting a little technical over here. If a guy outside, because they always say in a stock market, if you find undervalued stock, if someone has already seen it, that's the perception you have. How can you be the first person to see an undervalued stock? Any pointers for me to know, okay, this is an undervalued stock?
Well, the most general thing that people look at is net asset value, or the value per share of the company's assets, right?
Yes.
So generally, if you look at that metric, it's usually out there in the market already. People already know whether it's valued fairly in terms of its asset value. So what we do is that we generally ignore that, right? I mean, we look at it as well, but that's not our primary reason for investing in a share. I would advise people to, again, look at. It's a little bit more technical, right? You'll have to. You'll have to look at future potential of generating money over the long run.
So can we say maybe the future strategies of the company might be something you could look at?
Future strategies, right? And also, future strategies and the potential of those strategies to translate into profit.
That's where reading up on the company comes into.
Exactly. So understand what the company is doing and see whether it's possible. And of course, if you're new to investments, always come to a third party.
Yes.
Get their advice. Now, don't give them your money to them and then just but take their advice, right? For example, now over the past 2 years, as I mentioned, ASI gave less than -1%.
Yes.
But we at Cal Research, we were able to give our investors an average of 17% over the past 2 years. So there's always potential to make more money, more return, depending on the shares you put your money in.
Yeah. Great. So today we also know for a fact that our population, only 1% is involved in the stock market. We have a lot of foreign holdings also coming in, right? A lot of foreign participation.
So generally about 36% of the average money that flows through the market is from foreigners.
Yes.
So that's significant.
Yes.
So I like to say that this shows that there's lots of potential in a few shares in the market, and foreigners are already taking advantage of that.
So then, if the foreigners are taking advantage of it, for a guy out there waiting to make a profitable investment, what stocks are the foreigners holding be an indicator of a good stock?
Not necessarily, right? So some of the foreign funds that are holding shares are holding it for different reasons.
Okay.
They are looking, now this is where it comes back to your dividend question.
Yes.
Right? So most of the, let's say majority of the foreign funds are holding shares that will provide a consistent dividend.
Yes.
But for them, their hurdle rate is much lower.
Okay.
Right? So if they can make, let's say, at least 5%, it's good enough for them.
They're happy with that.
The reason for that is because there's very few places that foreigners can put money in.
Yeah.
So even 5% for them is good enough,
It's
right?
something.
Because they're looking at the whole world, right?
Yes.
But for a local investor, don't take that view. It doesn't make sense. I mean, why do you want to make 5%? It's less than the inflation rate.
Yes,
right?
yes.
So, yeah.
Yes, great. So also, I mean, it's very easy to go out there, pump in money into the stock market, expect dividends and etc. How important is tracking? I know you mentioned this a little while back as well. Don't let someone else run your money or do your thing. How important is it tracking, and what are some of the best ways you would feel it's good for a young professional to track your investment out there?
So most companies they release quarterly results.
Yes.
So on a quarterly basis, they provide you financial statements showing their performance for
Yes.
that period.
Yes.
If you're also a shareholder, you have the right to go to that company's investor presentation.
Yes.
So that's also usually done on a quarterly basis, right? So go there. I strongly advise investors just go to those investment forums and ask questions.
Yes.
All right.
Okay.
Understand what's happening. If you feel that profits have been lower than what you expected, ask why. If there's more expenses, ask why. This is how over the long run you become a better and more successful investor.
And that's a very good point. I mean, because most people wouldn't bother going out there to the forum for discussion. But as you said, that would be something. And also on a quarterly basis, you say keep assessing the performance of the company. So comes back again from knowing your company that you invest
Exactly.
in.
And then when you do this consistently, you will realize in the Sri Lanka context, prices fluctuate quite a lot.
Yes.
Right? Sometimes for no reason.
Yes.
And then you will know that just because your prices have fallen, it's not necessarily reason for you to exit that share.
Yes,
right?
yes, exactly. And also a common terminology in the stock market is signaling effect, right? A positive signal or a negative signal. Now, what are some of the signals that you would ask a young professional to be out there and watch out for? Or would you say, no, let's not get into signals?
In context, again, like I mentioned, Colombo Stock Exchange is really small.
Yes.
Right? So if you're trying to keep track of signals,
yes,
then the likelihood is that you're going to lose money invariably.
Yes.
So don't try to get into a share just because of, let's say, someone is buying it. Don't do it.
Yes.
That's the wrong way to invest.
Yes.
That's more like gambling.
Yes, because also, I mean, in the recent past, you've seen enough and more times where it just goes up and then comes back down before you could even know.
That's because there are a few larger players in the market,
yes,
right? That have their own interests.
Yes.
This is expected. It's not nothing bad.
Yes.
It's just something for you to be aware of as an investor.
Yes. So if I am to come back into our main discussion of profitable investment, if I may ask you some of the sectors, if you could name some sectors, maybe in line with our budget 2014 as well, some of the sectors where you would feel, okay, if you want to make profit, maybe this might be, and profit we're looking at a long term gain, I understand. Some of the sectors, if you could.
Sure. So given the macro environment right now,
yes,
you should see the banking sector doing well.
Okay.
Not the entire banking sector, a few shares within the banking sector. The economy is slowly starting to improve, so the losses that they had last year, they'll make up for it slowly.
Okay.
That's the banking sector. Other is the manufacturing sector.
Okay.
Right? Manufacturing sector will do well because the US economy is improving.
Yes.
And the exports...
Even the apparel sector, predominant.
For example, the apparel sector. And also local manufacturing sector as well.
Yes.
Because as consumer demand increases, consumption increases, these will also start recovering.
Yes.
Last year was really bad because consumption fell.
Yes.
Right?
Yes.
Majority of consumption was done by the government and not the private sector.
Exactly.
As a result, we saw a bad year for equities last year.
So manufacturing, and then you said banking.
Banking.
What about tourism, the hotel industry? Any take on that?
Well, I'm a little hesitant.
Okay.
To recommend the hotel sector right now.
Okay.
And the reason for that is that majority of the hotels are right now going through a re-rating system.
Okay.
The prices that they charge for the product that they offer, I feel is not on par. It doesn't balance out.
Okay.
So as you see new brands coming in, like the Hyatt, for example, majority of the hotels in Colombo and then down south and so on will have to price lower.
Okay.
And so you are likely to see
a drop.
a change in dynamics, which will of course affect the shares that are listed in that sector.
That are listed on sector. So we've given an idea of what sectors to go for and things like that. And just another take, because sometime back post-war we had a lot of IPOs coming in into the market, and people were like, okay, this is sure money, but in the recent past at times you saw it was not a guarantee. So if you are a young professional, you have a little bit of money, would you advise that guy to try his hand on the IPO and in line with your long-term thing?
It depends on what the company is, right?
Yes.
Recently you saw a few companies come into the market that either for various reasons, either be it timing or business model, doesn't really work out.
Yes.
Right?
Yes.
So be careful. Some of the IPOs that come out are not necessarily investable.
Yes.
Right? So again, you have to do your homework. Ask around, there are professionals in the industry, ask them and make a decision based on that.
Okay, great. So now just coming to the end or closure of the show, I would just want to ask you, what do you think of the future of the stock market? We know the current situation, and you said that this time is now, and it seems to be the best time to invest. What do you think the traction of this industry, because the stock market itself is doing a lot of educational program?
Yes.
So how is the dynamics going to be in future?
I think there's lots of opportunity in Sri Lanka, and also then of course it filters down to the market as well.
Yes.
Over the next few years, you'll see lots of IPOs coming in. You'll see lots of the market becoming bigger.
Yes.
And that this all provides opportunities for new investors.
Yes.
So if you start now, right, and you practice now, then you're going to be geared well for the future.
Okay, so the point is start early.
Start
early. Maybe the market might reach its peak or boom.
Exactly, because I mean you're young, right? You can't afford to make mistakes when you're 45, 50.
You can't.
And you can't. You can't learn from your mistakes either. So do it now. Learn from your mistakes. Over the next 5-10 years, you'll become a wiser and better investor, and that will give you the above normal returns you're looking for.
Okay, so this could be a subjective question, right? This could be an opinion that I'm seeking, because there could be a young professional sitting out there and might be wondering, okay, maybe I don't have enough money to invest. That's a statement you hear all the time.
Yes.
What do you think of the quantum of money? Does that really matter in a stock market?
It doesn't really matter, right? As I said, 80 to 90% of your disposable income is still a sizable amount, even if even if it's like 5,000 rupees, even if it's 200 rupees, it doesn't matter.
Even if it's 5,000 rupees,
it doesn't matter.
Your message is it's still fine.
Yes, because you're building your portfolio over time, right? You don't expect to make money tomorrow.
True.
It doesn't work like that. You have to, it's a process.
True.
You have to build up your portfolio, and in 5 years' time, you'll see as the country grows.
True.
The whole market will grow, the companies will grow, and you'll have 10 times, 15 times your return.
Okay, 10 times, 15 times your return I'm sure it caught their attention.
Yes.
So just a final question that I would want to talk on would be the fact that now you see currently you see the equity market which we are talking of. Is it a good idea for a young investor over there to have a balance, maybe to have a foot on, let's say, savings for now, just to maybe stabilize and then focus on the equity, or would you say no, just go all out there?
I'm a little bit of a more risk. I take more risk, and I think it's important to take risk if you want to make those returns. Why do you want to put it in savings account when you can put it in a few stocks that will give you something better, right? So if you put 10-20% into savings account, that's fine, right? The rest, put it into the market.
Weightage into the market.
Yeah, absolutely. Great. And right now this year is not good for fixed income. So because the rates are low, as I explained.
Interest rates are lower.
So just the market would be a good focus.
So you got the message very clear. Get your money, go to the stock market, invest, because remember, there's above average returns. Mr. Purasi said thanks a lot. It's been a pleasure having you on our show, and I'm sure it was so informative. A lot of things that they wouldn't have known, and the biggest barrier that I think you overcame, you ensured that they overcome, was that anxiety levels. Gave a little bit of confidence, and also at the same time saying any amount of money is fine to play on the stock market.
Absolutely. So good luck.
Thank you. Thanks a lot for being with us on our show.
Thank you.
And don't go away, because we have more on the other side of the break. But thanks for watching. Stay tuned in.